What's going on, everybody? Liam O'Reilly, Vermont economic realtor. Hope you're doing well. Lael Brainerd, Vice Chair of the Federal Reserve, gave a speech the other day, and she said some very interesting things in this speech. I think it was very telling about what's going on in the economy. Does a good job at summarizing what's happening, what the Fed is looking at, and what is likely to happen with interest rates coming into the future. I think in my mind, this speech has some pretty scary stats, and there's some it doesn't look so good. I mean, here's the speech that I'm talking about. Staying the course to bring inflation down, which is great. I mean, it's what they're doing. It's what the Federal Reserve's goal is. We've talked about it many times on this channel. They are raising interest rates, reducing the balance sheet in order to bring inflation down. There's no argument about that. That's exactly what they've said they're trying to do. Now, this speech, she discusses what is going on in the economy and the indicators that they're watching, and the trend of where things are trending. It seems to me like everything's peaked, and it seems to me that she thinks that Lael Brainerd thinks that everything has peaked. Now, the title of the speech, "Staying the Course to Bring Down Inflation," as you see right there, is not telling to the sentiment of what she's saying here in her words. Now, I wanted to go through. There's one paragraph in here that I thought was particularly concerning. It says right here, recent declines in average weekly earnings, temporary help services, and monthly payrolls suggest tentative signs that labor demand is cooling. And now right here. So if you watch my videos or you follow the Federal Reserve at all, you know that one of the things that they look for, or that they've been relying on, is employment data, and how many people are unemployed looking for jobs versus how many jobs are there available in the market. Okay, that's a big indicator of that's one of the metrics, one of their main metrics they've been using to justify continuing to hike the Fed funds rate and continuing to restrict the economy, which is needed to bring down inflation. And as you can tell from the title of the speech, their sentiment and what they want people to think is that they are going to stay the course, and they're going to keep rates high, keep rates elevated, potentially raise rates even higher than they are now. To that, I think in the last meeting they said around 5.25% is their new target. So we'll see if they actually get there. But with this speech, I think the data that they're looking at, the data in my mind is showing that things are trending down quickly. And so let's take a look at what she says here. Let's see, where's the sentence? So right here. Similarly, average weekly earnings have declined. After peaking in early 2021 and remaining elevated through May 2022, average weekly hours have declined and now stand at the bottom range for this metric over the 5 years before the pandemic. She goes on to say, the continued decline in average weekly hours is notable because the margin is among the easiest to adjust by firms facing declining demand, especially those who may be reluctant to undertake layoffs following the challenges encountered in restoring employment following the pandemic-induced layoffs. So what is she saying there? She's saying that firms who are struggling because of these higher interest rates, who are having problems, instead of laying their employers off, which would, cause the unemployment level to rise, and potentially the people who got laid off would take new jobs and would cause the job openings to drop, which they are. But instead of doing that, instead of laying people off, people are just getting their hours cut so that these firms don't have to pay as much money to their employees. So the unemployment rate may be great, but people are working less and they're earning less money. And it just seems to me what she's stating here, it seems like they're at a pretty low level. Right here. Restoring employment. What did she say? The lowest? Yeah. the bottom range for this metric over the 5 years before the pandemic, which is just, it doesn't seem like a good sign to me. And in my mind, when I read stats like this, especially something coming from the vice chair of the Federal Reserve, Lael Brainard, that is what the Federal Reserve is looking at. And, the title of the speech is Staying the Course to Bring Down Inflation, but she's bringing up these stats that are scary, that signal warning signs of an economy going south quickly. And here we go. Here's another one. In addition, average payroll growth in the Bureau of Labor Statistics Establishment Survey fell from 540,000 jobs per month in the first quarter of 2022 to 250,000 jobs in the fourth quarter, which is just, well more than half. Well over half are we're increasing jobs at a much lower rate than we were before. And then here we go. Despite constrained supply, wages do not appear to be driving inflation in a 1970s style wage price spiral. Now, this is the last point that I'm going to touch on. I'll leave the speech in the description so you guys can read it for yourself. But so again, another indicator that wages are the wage price spiral, right? Where people earn more, so they spend more. That is one of the things that the Federal Reserve was warning about. That was going to be a persistent cause of inflation and a big reason to continue hiking these rates and keeping rates at a high level is it's not happening. So anyway, I'll leave this speech in the description. Let me know what you guys think of it. I think, how is this going to impact the housing market? I think that this speech is very telling, that the Fed is probably closer to pausing and pivoting than they're saying. Now, I know the bond markets have been predicting this for months now with massive inversions and essentially money betting that the Federal Reserve is going to lower rates because we're going to enter into economic hardship. And I think the signs that we're seeing and the signs that the Federal Reserve is looking at are starting to show that, okay, inflation is starting to peak. The data that we're seeing is not quite as strong. There's not as many jobs available. We're not in a wage price spiral. The economy is heading downward. And, depending on how quickly the economy reacts and how quickly things head down, that I think, the quicker that things head down, the quicker the Federal Reserve is going to pivot and reduce their rates. Now, as far as the housing market, overall, the country is pretty equity rich. So people have a lot of equity in their home. So housing prices would need to, on average, decline significantly before before the majority of homeowners are being foreclosed on and forced to sell. But something that could happen is if hours are being cut in the labor market and people are making less money, then they don't even have to lose their job to not be able to afford the mortgage payment that they were paying on their home. If that continues to happen, and especially if companies start failing and we enter into a deep recession, then people who are well qualified are probably going to be forced to move, depending on how leveraged they are and what their mortgage payment is like. Now, the only thing about that is there's no good option right now for them to move to. There's not much housing out there, so it's not like they can sell their home and then move into an apartment to live for cheap. Especially if they're locked into a 3% rate, their mortgage payment is probably going to be the same as the apartment payment that they would be paying. So it'll be interesting to see what happens over the next year. I think what we could see, and I know there's been a lot of other people who have talked about this as well, both on YouTube and in the podcast space, but a change in family house formations where things are just too expensive. If people can't afford their mortgage payment, they'll start moving back in with their parents, or if they have adult children, they'll live with them and maybe start paying rent, start helping out with housing costs. And young adults, we've talked about it on this channel. Young adults are staying at home with their parents for longer periods of time because housing is expensive and people have added debt. So anyway, I definitely didn't go over all of the points that Lael Brainerd mentioned in her speech, but in my opinion, the title of that speech was very misleading. It's, they're staying the course of inflation is what they said. And that's what she says at the beginning. That's what she says at the end. And in the middle is all this data that says the economy is slowing, that there are some red flags starting, and that what the Fed is doing is working, and that there's a lag in, because when they raise rates, it doesn't affect things right away. It's, 6 months to a year down the road when the actual economy starts to feel the effects of these rates. And now that they're looking at this data, things are slowing pretty quickly. So it feels like a Fed pivot or pause is coming sooner than the Fed wants you to believe, than the Fed is stating by the even just the title of that speech. So let me know what you guys think. Didn't talk too much about the housing market, but I'll make a follow-up video relating the housing market to this speech. If you're looking to buy or sell a home here in Vermont, I would be happy to help you out. All my contact information is in the description. If you're looking to buy or sell a home in another state, I will find you a great realtor, so you're not working with somebody who doesn't know what they're doing. Be happy to do that for you. Please leave a comment in the description. I love to know what you think. Do you think I'm right in the sentiment of this speech and what the Fed's going to do? Do you think I'm wrong? Leave a comment. Let me know. And I'll see you guys in the next video.